Hey everybody, this is Wendy Pinnell. I am a realtor and a broker with On Track Realty, and I am here today. This video is all about closing costs in Texas. So, whether you have been, a buyer before, maybe your first time buyer, maybe you've bought and sold many, many times, maybe you've bought and sold many times and you're moving into Texas. In any event, you need to watch this video because in Texas it's different, right? And so this is a great video for you to watch to kind of give you an idea of what goes into buyers' closing costs. We can't talk about numbers super specifically, but we can still kind of give you a good idea. So I've got Austin Foss joining me today. Thank you so much for joining us today, Austin. I figured,
Thanks
you
for
know
having
what?
me.
Oh, absolutely, absolutely. I figured, lender closing costs are a big part of
Yeah,
home buying, so I thought, you know what, better to bring on a professional and kind of go from there. So, and you guys need to know. So we're going to talk today, we're going to talk about lender fees. We're going to talk about escrow charges. We're going to talk about title fees. And we're going to talk about realtor charges. So I think there is, a common misconception that you don't have to pay realtor fees if you're a buyer, and that is not true. So we're going to actually go walk through the buyer rep agreement and kind of go and give you a really good idea so you know what you're getting into. So if that
sure.
sounds like something you need to know, you guys definitely need to join us. Also, in the description section, we're going to include a link to where you can see everything we're talking about closing cost wise, because it's going to be hard to keep up with it. Austin and I are going to talk about a lot.
Yeah,
So you can definitely look at that. Click on that link and it's yours to keep. So yeah, Austin, take it away. Talk to us about lender fees and all that fun stuff.
sure. So, like you said, there's quite a bit that goes into it, right? It's broken down into two different sections, right? So there are kind of closing costs, and then there's prepaids, right? As far as kind of how we look at it. But generally, when it comes to talking to a lender, talking to really anybody, they're both kind of lumped together in that one all-encompassing closing costs term. Right. So I'll kind of start out from the top down as I see it. So lender fees are the fees to do the loan, right? It's the
Makes sense.
the
Mm-hmm.
processing and underwriting fee that maybe pays the processors, the underwriters, the closers. It kind of pays their salaries, right? As far as that's concerned, and
Mm-hmm.
um, so that's one of the fees as far as that goes. And then on top of that, you have discount points or it shows as like origination charges or something like that. I think is like the legal term. But
Oh,
discount
okay.
points
Okay.
are the other kind of lender fee. That's more tied to your specific interest rate, right? So if you want a lower interest rate over the length of your loan, which 30 years, 20, 15, whatever your term is, maybe you pay a little bit extra in closing costs to get that lower interest rate as far as that goes. So, such
That,
as,
that makes sense. I
you're
guess
going to
there's some
have
math
this.
there.
Yeah,
Go
exactly.
ahead.
So really it comes down to there is no one right answer for everybody, right? Some people they have a little bit extra cash, they want to pay the extra cash to get the long-term savings. Whereas other people purchase a home knowing they're only going to have that mortgage or that specific loan for maybe 2 or 3 years, right? So at that point, it
Right.
doesn't make sense to pay that extra to have the lower rate because you're not going to make that money back as far as that's concerned. So those are the two big ones when it comes to.
So
Uh,
what do those look like? Like when you're looking at the actual, at the closing table, what are those going to be called? Like you said, discount point. How about
mhm.
the lender's profit? What is that going to be called
Yeah,
or shown
so
as?
the lender, for us, it's processing and underwriting. There's like a line for processing and a line for underwriting as
Oh,
far as
okay.
that's concerned.
Okay. Okay.
Again, depending on program for VA, we don't have any processing and underwriting fees. It's our way of kind of giving back to veterans, kind of our way of saying thank you. We waive those entirely as far as that goes.
Wow, that is
Um,
so neat. Wow.
yeah,
That's
it's
fantastic.
great. I'm really proud of our company for doing that. And that's how it shows for us. You may get some places who just show it as a lump sum origination as
Hmm.
far as that
That's
goes.
that's
Again,
what I'm used to. Yeah, that's
yeah,
what I've
that's
seen
one
a
of those
lot.
things that may be different.
Hmm.
The nice thing for us, the way we do it is we know our clients know everybody knows what that's going to be. right? We know it's going to be a set amount every time, right? So that kind of helps people plan. It helps us plan. It's not one of those where like, oh, it could be 5%, it could be 0.5%, it could be 1%. So then your fees are changing based on your loan amount. You've got all these other things at play. That's why we have it set up that way. It's just a much easier way to go about it. So that's
So
really
it
the main
doesn't
lender
change
cost.
then. So the loan processing fees don't change for you guys?
Correct. Yeah,
Wow,
so
that's
it doesn't change based.
fantastic. Oh, we can predict it then. That's
Exactly.
wonderful.
Yeah. So it doesn't change
Wow.
based on loan amount. It could be, within $100 difference based on, program as far as that
Hmm.
goes,
Hmm.
conventional versus
hmm
FHA versus USDA, something like that. But it's not one of those where if it's like, oh, your loan amount is 500,000, well, now you got to pay more closing costs, more lender fees versus somebody
Gotcha.
whose loan is 125,000. It's the same, right? So that just helps everybody to kind of plan and be more prepared on that front. So though that's the one that you want to look at to make sure that you're not getting charged some exorbitant amount for either the interest rate or anything of that sort.
So can I tell you a horror story about that?
Please do.
We refinanced a VA loan back in 2003. And this was back before they gave you loan estimates. And sometimes you
Mm-hmm.
didn't see anything until you were at the closing table. We didn't know any better. And the guy charged us like 3% more than you would usually expect in the origination fee.
Mm-hmm.
And I wasn't a realtor yet, didn't really know what that was. But then, so I signed it, we paid it. Years down the line, I'm pulling out paperwork and I realized, man, he charges like $6,000 or something
just to just
for,
to have it on there. Yeah,
yeah.
why not?
And he just put it on there. He didn't disclose it. Wow. I never realized it until I was comparing it after I was licensed. I'm like, man, I can't believe this guy got away with that. So
Mm-hmm.
big difference between how they did things in 2003, versus how they do things now. So,
There's a lot more regulations in place to
mhm,
prevent those kind of things. Time. You have to receive a loan estimate in a certain period of time after you go under contract or you initiate your refinance. You have to receive
mhm.
your closing disclosure a certain amount of time before you actually, you know, get to closing. Things like that. There's a lot of safeguards in place to prevent exactly that from
Yep.
happening. To
Hmm.
where you look at it and you say, "Oh my gosh, this is $4,000 higher. What's going on?"
Right. Exactly. Hmm.
Generally, my team and I, we do a really good job of preparing people so that when we compare our loan estimate to our final closing disclosure, like it's
Hmm.
typically
hmm.
within 100, $200, right? As far
Excellent.
as that
Yeah,
goes.
that is excellent. That's exactly what you want to see. Another horror story. Our first rental we ever bought, the guy quoted us an interest rate on a second mortgage of like 8%.
Mm-hmm.
When we got to closing, it
Eight
was 11
percent.
and a half. Yeah,
Eight
for the
percent. Yeah.
second lien, which is really high. But when we got to closing, it was 11.5%.
Yep.
And I felt stuck because, we were buying a rental. The seller was ready to close. I literally did not see that until at the closing table.
Yep.
So,
That's not allowed. You can't do that. If there's
which is
any,
great nowadays.
it,
Yeah.
yeah,
It's
if
like,
there's any substantial change in
hmm
the APR that triggers, there's all things that get triggered and stuff like that to protect consumers from that exact
right.
type of thing happening.
Which is great. Yeah, it's
Mm-hmm.
fantastic. Definitely. So, what I show for, lender fees, I show things like the origination fees, like you said.
Yeah.
I show potentially the appraisal fee. Does
Mm-hmm.
that come, before? You know what, Austin, we should have talked about the stuff that comes beforehand.
Yeah.
I forgot we were going to do that. So, what kinds of stuff can they expect to spend that they may not even get back if they don't buy the house?
Sure. So when it comes to, let's say you're buying a house, right? It's a little bit
Hmm.
different if you're refinancing, but let's say you're moving to Texas. And I want to say, first and foremost, I should have said this up front again. This is specific to Texas, right?
Right, right.
Everything we go over is specific to Texas. Every state is a little bit different in terms of closing costs. I've seen that
Definitely.
across the country,
Hmm.
as
Hmm.
far as that goes in the different states that I've done loans in. Um, but in Texas, you're generally before once you get your offer accepted, you're going to send an earnest money deposit and your option fee
Hmm.
to the seller or to the title company,
To the title
technically,
company. Hmm. Yeah,
to the
yeah.
title company, and that's typically going to be depending on your situation. It used to be before everything happened with the real estate market in the last 18 months, 1%. of the purchase price, right?
Right,
Generally
right,
was a good place to start. Now it's who knows what it is, right? It
right, right.
very much depends
Well,
on how much
yeah,
competition, stuff like that.
yeah.
Um,
It's completely negotiable, but you're right. If it's
mhm.
not at least 1%, the sellers are like, really?
You really want this? Are you really
Yeah,
interested in this? Yeah.
exactly. Yeah, yeah.
So let's say you're buying a $400,000 house, and
Hmm.
we're going to use that 1% as the earnest money deposit, and I don't know, $200 for option. The earnest
Hmm.
money
Hmm.
deposit is basically your good faith deposit with the seller.
Hmm.
And
Hmm.
it's very similar to when you go and you rent an apartment and you go and put your security deposit back,
Hmm.
or
Hmm.
down, with
That's a great
the
way of
landlord.
explaining it. Yeah,
Um,
that's a great way of putting it.
I tried. But basically, you figure, okay, you got to put first month rent and your security deposit, and then when you move out, you get that money back. I mean, has anybody ever gotten their security deposit back? Maybe. Um,
Yeah.
However, the way it works is you put that earnest money down, and if you close, right, if you go through with the transaction, you close, your $4,000 that you put down as earnest money gets applied towards your closing costs, right? It goes
Right.
towards your
Hmm.
overall cash to close, which is closing
Hmm.
costs plus your prepaids plus your down payment is your
Hmm.
overall cash to close. So
Right. Hmm.
that earnest money does go towards your cash to close. Now, let's say something comes up that you decide not to close, right?
Hmm.
Your
Hmm.
inspection comes back poorly, your
Right.
appraisal
Right.
comes in
Hmm.
low,
Hmm.
something, some unforeseen circumstance comes up that you just can't
Sure.
proceed
Hmm.
with the
Hmm.
transaction. If that occurs within your option period, say, again, that's why you want to get an inspection immediately, so that you're
Right.
within that five to
Absolutely.
seven day
Hmm.
option period.
Yeah. Yeah.
You will be refunded that option money as far as that goes. You get that back.
Well, the
Um,
earnest money, you mean,
the
right? You get
the
the
earnest
earnest
money. I'm
money back.
sorry, the
Yeah.
earnest money you
Yeah.
get back. The
Yeah.
option,
Yeah.
which is the much smaller one, goes to the
Yeah.
seller regardless.
Yeah. And that's
So
that's definitely pain. One thing we've seen in this like really strong market is we've seen people, offer like $700 for option fee.
mhm,
And
mhm.
if you decide you don't want to buy that house, you don't get that money back. That money goes to the seller.
Right, that goes to
So
the seller regardless. Yeah, so
yeah,
then
yeah,
people are like, "Well, then I'm out my option fee and I'm out my inspection and all this other stuff." And it's like, well,
exactly.
but you're
Uh-huh.
also not moving into a place that is either not safe or it's not what you actually want. So you're actually
Right.
saving money by
Exactly.
doing that.
Yeah.
Um, but that earnest money does go towards your closing costs, and then as long as you terminate within that option period, then you do get that back as far as that goes. So you got that.
Right. Right.
You'll pay your inspection, which again, you always want to get an inspection.
Definitely.
People
Yeah,
think you
I
don't want to get one
definitely
for
do.
new construction. That's when you need the inspection the most,
It's true.
actually, is
It's
for new
true.
construction. And you
Yep.
want it to be a
Yep.
third party. You want
Hmm.
it to be somebody that's not associated with the seller or the builder.
Right.
Um,
Right.
that is something that's going to be outside of the loan itself. So that's a totally separate cost. It's not anywhere. It has nothing to do with us. The inspection is solely for your records as the
Right,
buyer.
right. Absolutely. And we always provide a list of inspectors that we completely, have worked with, and they've always been great. And we're always going to send you like a whole list of them
Mm-hmm.
because time is of the essence. You got to figure out which one is available. And you may find that one or two, the first two can't get you in, but the third one can. So that's one of the things we do is we'll provide you with that list, especially if you're moving into the area.
Yeah.
Probably don't know any inspectors. So that's one of the things we're going to make sure that, you have, at your disposal. But yeah, you're right. You're not going to get that money back if because that's a third party. The inspector, he did his job. He deserves to be
Yeah.
paid,
Exactly,
so.
exactly.
Mhm.
And a lot of times, like, let's say you go through it and you say, "Hey, this one didn't work out," and you go to
Mhm.
purchase the next one. I mean, the inspector may say, "Hey, you use me again, you'll get X, Y, or Z." Right? You
Well,
never
that's
know,
good.
right?
Mhm.
Something like
Mhm.
that may occur, and then the other portion that you'll pay outside of closing. So we've got our $400,000 or $400,000 house, $4,000
Mhm.
option or earnest money, and
Mhm.
$200 option. And we
Right.
paid our
Mhm.
inspection, which again you don't want to cheap out on an inspection. So let's
Right.
just say
Right.
300
Mhm.
bucks.
Yeah. Yeah.
Um, you then will pay for your appraisal. So your
Mhm.
appraisal is going to be done, or it's going to be ordered up front, and you pay for it up front. Okay, so pay for it up front, and then it's credited to you at closing. So you can put it on a debit
Okay.
card or a credit
Mhm.
card or what have
Mhm.
you.
Mhm.
Let's say the appraisal runs $700. Well, you
Mhm.
get it's disclosed up front on your loan estimate as a $700 charge. When you
Mm.
go to
Mhm.
close, that $700 moves over to paid outside of closing. meaning that you're not getting
Got it.
charged
Yep.
twice for this appraisal because you've already paid it up front.
Yeah.
So those are the only upfront costs, and then your
hmm
down payment, the remainder of your closing costs, all of that is then brought in the form of a wire transfer or cashier's check at closing.
Right. So I know, there are sometimes some occasions where you can pay for the appraisal at closing. Are
hmm
there occasions like that where you don't have to come out with it out up front, but you can just does that ever happen? So you don't have to
It
write
does.
that
It
big.
does happen from time to time.
hmm
It's a little bit more rare because then the entire, everything is on the lender, right? Everything is on the
hmm
bank in case the loan doesn't go through or something like that. That
That is a good point.
someone's got to pay
hmm
for that appraisal, right?
Definitely. Yeah. Yep.
Um, and if it, banks and people aren't generally like, ah, cool, whatever, here you go,
hmm
here's some money for something that we had nothing to do with, right? So
Right.
it's mainly a risk thing. Is why a lot of time, like I remember I worked with a company previously who actually did that, and we ran the numbers at the end of 1 year of going that route for one program, not for all of our programs, just for one
hmm
program. I
hmm
think the bank lost $130,000 from
Wow.
you know
Wow.
us
Well, because
footing
you got
us
to pay
footing
him.
the
It's a third
bill.
party.
Yeah,
Wow.
us footing the bill again. Like you
Wow.
said, the appraiser has gone out and performed the order.
Right.
They need to. They
hmm
they deserve to get paid.
hmm
The appraisal comes in low, subject to repairs, whatever. Buyer
Right.
backs out.
Right. Right.
Someone's
Ah,
got to pay them, right?
that
So,
makes sense. Now, I
um,
know personally, when we do loans personally, like if we're buying a house or we're refinancing, we always tell the lender, hang on until we can kind of work through this process and then
mm-hmm,
order the appraisal later because we want to make
mm-hmm,
sure nothing's going to go wrong. So if it's a purchase, we want to get through obviously the option period first. And we do recommend that for our buyers as well. Get through
yeah,
that option period first
yeah,
before you
absolutely.
move on. Just, to kind of be as careful as you can and speaking of that option period, I have had buyers who, have backed out, and it was absolutely the best decision to make. And I then they're always disappointed, because they put up that option fee and that earnest money. But if you have a house that has, a fundamental flaw that you couldn't tell, and the inspector pointed it out, it's the right
Mm-hmm.
call to make.
Yeah.
I can think of a buyer that we had years ago who ended up twice having to cancel during the option period, but that third house was more dated. It didn't have
Mm-hmm.
the bells and whistles, but it was structurally sound.
Mm-hmm.
And they made a killing when they sold because they made the right call,
Yeah.
So, that's that money that comes, before closing that can be hard to lose it. But yeah, you got to make those hard calls sometimes. So yeah, so okay, so the earnest money, which can be returned, right?
Yep.
If it's during the
Yep.
option period, it'll
Yep.
come back to you. There's other times, where it's dependent on things where it might come back, right?
Yep.
But in terms of money, you're just not going to see again. It's that option fee, that inspection,
Yep.
and that appraisal. So those
Yep.
are non-refundable,
Exactly. And one thing we do to
unfortunately.
help kind of combat that for a lot of people is we'll order the appraisal early. That way
hmm
we can kind of get your spot in line. And then if there's questions, we'll put it on hold. Right. So that way you kind of paid for it. We're able to work the rest of the file, but we'll put the appraisal on hold pending figuring something out. And again, that almost kind of goes back to working with the lender who's going to do their due diligence up front to where
Right.
you don't have to scramble during your option period to know if you have a workable loan. All that work's already been done up front to where you can just order the appraisal right away and you're good to go moving forward.
You know, you just made a comment that is really interesting and I think really does show incredible brilliance on your part, which is to get that appraisal in line because we've had several closings delayed just because the appraisers are so busy,
Mm-hmm.
and so that's a really good idea to just go ahead and get it into the queue. And even if things get canceled or it needs to be delayed, at least you're in line,
Yeah,
because
because then
we
you're
have,
at least getting bids. Yeah, you're at least
yeah,
placing bids to
yeah,
see. Because I mean, you never know. You may place a bid for an appraisal, and they may not be able to get to it for 3 weeks, right?
right,
So
exactly.
then
Yeah,
you can
yeah,
still spend all that time working the actual file itself before they even
right.
go out
hmm
there. Whereas if you wait to even place that order in the first place, and then it's 3 weeks from there, that's why we try
Right.
to do that as much as possible to avoid any sort of closing delays or any additional charges for lock extensions or whatever that may come out to.
Right. So, and if you're joining us today and maybe you're a first time home buyer, we're talking about earnest money, and earnest money basically tells the seller, I earnestly want your house.
Hmm.
And then the option fee, you're telling the seller, hey, Mr. Seller, will you give me a week or whatever you negotiate, 5 days, 10 days to get out of this for any reason? Give me the option to get out of the contract. And the seller says, sure, I'll take your option fee, give you a week to opt out. And then the appraisal. The appraisal is what tells the lender and helps you also to know what the house is worth. So it's kind of like if you've heard the word appraising a situation. You're taking it in, you're deciding what it is. That's what an appraiser does. They're going to go in there, they're going to check the house, they're going to do a value right, and possibly they may say that some things have to be fixed. That's kind of what
Hmm.
the appraisal does. I think some people get confused between the inspector and the appraiser.
Yeah,
Very different
absolutely.
because the appraiser doesn't go in with a fine-toothed comb, you know?
No, so they basically look for things that are adding or subtracting actual value, monetary
Mm-hmm.
value from the property. The
Mm,
inspector is going in to point out little flaws, like, hey, you may want to get in, and the air to your guest bathroom isn't coming through, or this isn't quite how up, how like perfect or something like that. They're going to look for those little things. The
right.
air coming through the guest bathroom does not add or subtract value, monetary value to the home. And so the appraiser, they don't care, right? They
Mm-hmm.
don't, that stuff just doesn't matter. What they're looking for generally, and this, they generally are looking for kind of square footage, bedrooms,
Mm-hmm.
bathrooms,
Mm-hmm.
layout, things like that they're actually going to affect the value of that house or that condo or whatever it may be.
Right.
And so they're two different people that seem to perform similar tasks, but they're very
Right.
different in
Right.
their
Mm-hmm.
approach. So it's
Yeah.
important
Yeah.
to know that, and also know that the lender cannot speak to the appraiser.
Yes.
It used to
Yes.
be
That's
something
true.
where me as the lender, I could just call the appraiser and say, hey, I need this value to make this deal go through, and
Mm-hmm.
if you give
Mm-hmm.
it to me, you've got more business coming your way.
Right. Right. Mm-hmm. Mm-hmm.
Part
Yeah.
of what contributed to the crash, right?
Yeah, yeah,
And
exactly. We used to do that. In fact, we bought a lot of rentals in the early
mhm,
2000s. And, I wasn't a realtor yet. But the realtor I was using, I'd say, what is it worth? And he would give me a CMA, and then he'd call the appraiser because we got to pick out our own appraiser, right?
mhm,
Unheard of.
mhm,
And he would say, hey, will it appraise for this? And she would look at it and say, yeah, it'll appraise for that. So I knew exactly what to offer.
yeah,
Um, like unheard of nowadays. For one, you don't get to pick your own appraiser.
nope, nope,
As the buyer. And yeah, I've noticed that the lender absolutely cannot talk to that
nope,
appraiser at all. Yeah.
nope.
Very
Everything
much
is done
this.
through a third party appraisal management company.
Mm-hmm,
It's
mm-hmm.
almost like if you have, like an ADP or something doing all of your payroll. You go through
Mm-hmm. That
ADP for
makes
your
sense.
payroll information or
Mm-hmm.
stuff like that. We go through
Yeah,
our appraisal
yeah.
management company and say, hey, we need to schedule this reinspection, or we need to ask a question about this. We
Right.
ask them, they ask the appraiser. So we're not even legally allowed to even speak to them
Yeah.
to
Yeah.
avoid any sort of tampering or anything like that.
Oh, it's completely hands off now. Yeah.
Mm-hmm.
Yeah. For all the parties. So, okay,
Mm-hmm.
we've kind of gone down this rabbit trail. We actually did not mean to talk about appraisals this much, but Austin and I, we love real estate. So, all right. So that covers, the fees beforehand. We talked about
Yep.
the origination fee. Some other things I see are like a flood certification fee,
Mm-hmm.
maybe a credit report.
Yeah.
Yeah. Talk to me about those, these
Yeah, so
other.
those are always going to be just little small charges here and there. Credit report.
Mm-hmm.
Say around $40. Flood for $10. You basically have to run a check to see if a property is in a flood zone,
Mm-hmm.
and
Mm-hmm.
then there's a charge for their credit report, right?
Right.
And
Mm-hmm. Mm-hmm.
to be honest with you, like we don't want to just run credit reports over and over and over and over and over again just to do it. Like we got to pay money to do that every time, right?
Right.
So
Right.
there's those, and then sometimes there's like an attorney review fee as far
Right.
as that
Right.
goes, for the
Mm-hmm.
lender's
Mm-hmm.
attorneys to review everything to make sure everything is up to code. So
Mm-hmm. Mm-hmm.
those are pretty small
Mm-hmm.
as far as that goes. Those are going to be required, um, basically by all lenders, on that
Right.
front. The
Right.
nice thing about
Mm-hmm.
closing costs, again, in Texas, is that everything is pretty standardized across the board. It's not
Mm,
one where you can say, "Oh, I don't like your fees. I'm going to go to this
right,
other
right.
lender and see what theirs are," or especially with like title and things like that. So,
Yeah, yeah. When I was thinking in my mind when you said flood certification, wow, flood insurance. That is
mhm,
really regulated, isn't it? Like there's
very,
you can't go from insurance agency to agency going, "Hey, can you give me the best, quote
yeah,
here?" That's not happening because it is very regulated, very
yeah,
fixed. Yeah. Yeah.
absolutely,
Mhm.
absolutely. So yeah,
Mhm.
a lot of things outside of like lender fees are gonna be the same no matter what.
Yeah.
It's
Yeah.
literally services you can shop for and services you cannot shop for.
Right.
Anything
Right.
under
Mhm.
those are going to be third party related fees that are the same regardless of who you go with.
Yeah, yeah. Another one that comes up, and it's a third party. I don't know exactly if it fits under lender, but it's the survey,
Yeah.
right?
Yep.
Hmm.
Yep. And so if there's not a survey that already exists, then there may need to be a new survey done for the property,
Hmm.
and that's something that's determined by title, not by the lender.
Okay, okay,
We're not
interesting.
actually
Yeah,
super
yeah.
interested in the survey, to be honest
Hmm.
with you. Um,
Wow.
and so a lot of times it just comes down to if there's an acceptable version for title to, as far as that goes. Maybe the property is 70 years old and there's not a survey
Right.
done within the last 30 years
Hmm.
and there's all these
Hmm.
improvements into the property or things like that. So we always will request that, the seller send in the survey just as soon as they have it. Or if you're
Sure.
refinancing,
Hmm.
if you're doing a refi, that when you send us your initial documents, that you send us your survey as well, because we want to send that to title ASAP for them
Yeah.
to review and just make sure that everything's good.
Yeah.
95 times out of 100, it's good, but it it doesn't hurt to just send it to us so we can send it to them and get the okay.
And we have had closings delayed because of discrepancies with surveys. We've
Yep.
definitely had that happen. We had one like the day of closing where a title company was like, we can't, we don't like this survey
Mm-hmm.
because it was like the poles in the ground or whatever were not in the right places. So
Yeah.
and the other thing, surveys are with your typical normal house, they're not too much of a wild card, somewhere, or somewhere in the neighborhood of like 400.
Mm-hmm.
But when you add acreage, man, that price can go up fast. We're
Yeah.
talking one.
Acreage, unique properties, all those kind of things. Yep.
Mm-hmm, mm-hmm. So yeah, another reason we can't give you like super specific numbers, although in the PDF I provided, I do give kind of some ballpark numbers. But yeah, that's another reason. If it's acreage, I've seen them well over $1,000
Oh
for those
yeah,
surveys.
for sure.
So yeah. Okay, so that really kind of covers. Let's see here. I've got flood certification fee, discount points, HOA fees, credit report, attorney fees, survey. I think we've covered
Mm-hmm.
all the lender fees, although the
Yeah.
survey really doesn't go in there.
Right.
So
Sure.
I guess, Gail, should we move on to the idea of escrow
Yes,
charges, and
that's an
kind of talk about
important
that
one.
for a little bit?
That's a super super important one.
Hmm.
So basically with escrow, uh, most people will escrow their mortgages, especially if you're a first time buyer or just haven't owned a home before, or if you're putting less than 20% down
Right.
or using any government product, then you
Hmm.
are required to escrow.
Hmm. Hmm.
So with escrows, what you do is when you purchase your house, number one, you have to pay your homeowner's insurance 12 months in advance. It's a weird
Okay.
thing.
Yeah.
Homeowner's
Hmm.
insurance is wild. I don't know why it's set up that way. It just is. So you're always paid 12 months in advance for your homeowner's insurance. So at closing, you pay 12 months. So again, let's say your homeowner's insurance is
Sure.
$100 a month.
Hmm.
That's
Hmm.
1,200 bucks, right? That you
Hmm.
pay to your homeowner's insurance company. On top of that, you have the funding of your escrow account. So there's 3 months of property taxes and 3 months of homeowners insurance that are collected to fund that escrow account, which
Hmm.
is the escrow account is basically almost like a separate savings account at your bank where your property taxes and your homeowners insurance get paid out of each year. So
Yeah.
each
Yeah.
month when you pay your mortgage, it'll say, this much goes to principal and interest, this much goes towards your
Right.
escrow
Hmm.
account. That
Hmm.
way in December, again, Texas property taxes are paid in December. In
Hmm.
December, when your property taxes are paid, they just go into that escrow account where you've been making payments into each month, get the money out of there and pay it. Same thing with
Yeah.
homeowners
Yeah.
insurance renewal once a year. Go into that escrow
Hmm.
amount, get it out, pay it. That's good.
All
You
right.
don't even think
So
about it.
So, a lot of times property taxes change in a massive way when you buy a house from what they were. How do you guys, as the lenders, how do you decide how much to put into, as your escrowed amount? Like, how do you decide what you think the monthly amount's going to be, knowing it's probably going to change?
Sure. So for any property that has a previous year's tax bill, right? So we're approaching 2022. So every
Hmm.
property has a 2021 bill at this point, right? So if somebody's going under contract for a house, we go off of the 2021 tax bill,
Okay.
as far as that goes. And
Hmm.
where you may run into issues is if you run into a new construction where the previous
Yes.
year's tax bill is
Yes.
taxed on a plot of dirt, right? There's not a house on there, and so you're
Yes.
like, man, the taxes are like
Absolutely.
$70 a month. This is awesome. Well,
Right. Exactly.
they
Yeah. Yeah.
taxed, literally a bunch of dirt, not even grass, right? So what's
Hmm.
going to happen
Hmm.
is that next year your tax bill is going to go from $70 a month to probably $500 a month,
Yeah,
right?
it's
$600
true.
a month,
It's true
whatever
because
that
it's
may
new
be.
construction. So yeah, yeah, it's
Mm-hmm.
going to be up there.
Yeah. Now,
Did you
what the
go ahead?
lender can do is they can say, "Hey, the previous year's tax bill said this. We don't know
Hmm.
what that next year's tax bill is going to come out at. There's no way to know for sure.
Hmm.
So you can really go anywhere in the middle as far as that goes.
Okay.
Based
Hmm.
on either in the low end the previous year's tax bill, which again entirely legal, nothing wrong with that, or if you want to be super safe to where when your escrows get paid, you don't have this massive shortage, then you can do whatever the tax rate for the area is times whatever your purchase price is and divide that by 12. That way,
Right.
you're going to have enough in there when that tax bill comes due, and then it'll reset once the new bill comes out, stuff like that. So,
Interesting fact you should know about new construction contracts is everyone I've ever read has a clause in there that says, they're going to, well, they're going to pay for the property taxes. Let's say you buy in September. They're going to pay for the property taxes from January to September. Well, every new construction contract I've ever read says, hey, we're not responsible if the taxing authority taxes us, you at 500,000 for the whole year, we're not paying any different, right?
yep,
So you will still get charged for 500,000,
yep,
even if you only owned it maybe for 4 or 5 months of the
yep.
year. You're still and so you're already going to be so short,
Yeah,
and that,
that's the hard part about new construction is a lot of times the seller hasn't paid any of the property taxes. And if you're
yeah,
buying a
yeah.
resale and
Hmm.
you go to purchase a house in excuse me, in May, the seller has paid, they may not have paid the taxes. They probably paid them out of pocket with their escrow or whatever.
Sure. Uh-huh. Uh-huh.
They paid the taxes from January until May.
Right.
You're paying
Hmm.
from May through the end of the year, and you basically, the way it works is you kind of get a credit from the seller for what they've already paid.
Right, right. Hmm.
So you get that credit from them. You're paying from then to the end of the year. With new construction, that may not be the case. They may just say you're paying for the whole year, regardless of how long you've owned the house.
Yeah, yeah. Well, a lot of times, let's say Dallas had, they're going to say this house is worth 400,000 and they're going to make it work, they're going to charge you from January to December for the whole year at that value.
Yeah.
Well, you didn't get any help from the seller from January through May when he owned it because he paid the small amount. So
Mm-hmm.
suddenly, yeah, and I'm going to be honest, completely honest, I hate escrowed loans. I get their purpose. They really do serve a valuable purpose because, the average person maybe really needs that, not being aware. But
Mm-hmm.
those differences in how suddenly you have a shortage and
Yeah.
it just kind of drives me crazy. I get a lot of our clients who will call after the first of the year and just be like, okay, what happened here? Another thing that often can really catch the buyers off guard and that you need to know about. If the house you're buying has the over 65
Yep.
exemption,
Very important.
yeah, because that's a really big discount,
Yeah.
So then you go in and you lose it, and suddenly you have an escrow shortage, you
Mm-hmm.
know.
And
So
we don't, and we check that, right? For us, like we check to
oh,
make
good,
sure
that's
we look and
excellent.
see, like, okay, well, they are paying $200 a month because they have the homestead, they have the over 65 exemption, uh, things like
Right.
that. Do
Mm-hmm,
those
mm-hmm.
apply to your situation? Yes or no? And if they don't, then we're not going to collect based on, that, it also, we're not going to collect based on that, what they had paid. It would basically need to run a tax estimator to say, like, when you actually get the
That's
property, your
great.
taxes will be this. So we do everything we can to ensure there's not going to be any sort of a shortage, because then that creates a whole
Hmm.
other cavalcade of issues down the road.
Yeah, absolutely. It sure does. Now, and I said I hate escrow loans, but I've known people that, have almost gone into foreclosure because they didn't know that they
Yeah,
were supposed to be paying property taxes. So it does serve a valid purpose. It's just for me personally,
sure, it's a preference
I
thing.
don't
It's a
like it.
preference thing, and if you're responsible enough with your money, then go
Right.
for it.
Yeah, absolutely. So, the insurance part can kind of fluctuate, right? Because
Hmm.
when you're trying to decide, you can shop the rates, you can pick your own insurance provider.
Yep.
Also, Texas, and especially like Dallas County, gets a lot of hail and
Yep.
storms. And so, depending on which county you buy in, really can affect your insurance rate. So, there's a certain amount
Yes.
of strategy, especially like if you're borderline to what you approve for, look
Yes.
in a county where, it's going to have lower homeowners insurance,
Hmm.
so it makes a big difference there too.
Yeah, and it's really important, like you said, in Dallas, there's a lot of hail. In Houston, there's a lot of flooding.
Yeah. Oh, oh,
Things like
wow.
that
Yeah.
are things that we as the lender take into account, and it's very important to know what area you're looking in. I talked to a client recently who was looking to purchase either in Houston or San Antonio, and I said, "Hey, I gotta kind of know where you're looking, because it's going to be very different what you can qualify for. A, the taxes are different, and B, your insurance is going to be wildly different.
Yeah.
And
Yeah.
there's just, in Houston, your house might flood. In San Antonio, it may not rain all
Yeah.
year, right?
That's a good
So
point.
it's important to
Wow.
know where you're looking to, um, because you may be able to get approved for 375 in one area, but maybe 345 in a different area, simply because of those changes in insurance and taxes and things like that.
Some real strategy there. Definitely some strategy. And in fact, in future episodes, we're going to dig into that a little bit more. We'll dig into property taxes, we'll dig into insurance. We're going to do some episodes on PIDs and MUDs. So if that sounds really weird, we won't get into that here, but just look out for it, because those are all things that are going to affect, your monthly payment that you need to know about.
Yeah.
Uh, that just happened in Texas that maybe didn't happen in whatever state you're moving into, or that
Mm-hmm.
you never knew about. So yeah. So okay, so that kind of covers, what we've got here on escrow. Anything else
Mm-hmm.
to add to the escrow part?
No, I don't think so. Like I said, it's 3 months of property taxes and 3 months of insurance, because we always want to give you a 2 month cushion in that escrow account. So you figure once you close, you skip that next month, and
Mm-hmm.
then from there you've got 2 months of cushion in that escrow account moving forward. So that's why it's set up that way with 3 and 3.
Right. And one thing to kind of that, also is you're going to hear a couple of different insurances. And so just know that homeowners insurance is what we're talking about. We're not
Yes,
talking about mortgage insurance.
correct, correct. Yep,
So that is different. You'll see that as part of your payment, but completely different than what's in your escrow accounts,
yep,
right? So, okay, well, let's kind of move on. Let's talk about title fees, title company fees. Because again, this, especially if you're coming from out of state, this could be wildly different than what
yeah,
you're used to, because some
extremely.
states are attorney states, some say are escrow states.
Mm-hmm.
So you're gonna see some big differences there as
Yep.
well.
Yeah. So with title, again, very heavily regulated in the state of Texas. So it's going to be basically the same regardless of where you go. Like I named Independence title, Austin
Sure.
title, Stewart title, Capital, wherever you want
Yeah.
to go, right? Um, what you're mainly looking for is somebody who's going to get their work done and do it efficiently, and go from there. So with title, the owner of the is always going to have a policy for their property, right? And
Hmm.
what it does is, having a title policy means that when you are selling your property, it ensures that you do have clear title as far as that goes, meaning that nobody else has a claim to your
Yeah.
house.
Yeah.
There's no random lien underneath it or something like that somebody can just throw on there just because
Sure.
they don't like
Hmm.
you or something like that.
Yeah.
Um,
Yeah. I mean, like an example of this, when our daughter was selling her house, this city citation came up from years ago when the previous owner hadn't mowed the lawn and let it
yep,
get ahead. So, and it was like $400. Well, they were able to talk to the title company and they didn't have to pay it because that was a previous lien on the
yep,
house. So it's things like that. It's very important. Now, there are investors who have bought without title policies, and I can tell you it's bad news. You never want to buy
Very.
without a title policy.
No
You
lender
can,
will let you close without a title policy.
yeah, yeah, yeah. It's those cash buyers that just don't know any better that it's bad
Mm-hmm.
news.
Mm-hmm.
So,
It's not
yeah.
you're saving maybe $2,000 if that
Mm-hmm. Mm-hmm.
by not doing a title policy, but you're opening up a door for a
Oh, yeah.
lifetime worth of
Yeah.
headaches.
Absolutely. You sure are. Yeah, definitely not worth it.
Mhm.
You
Yep.
know, I was negotiating a short sale once where we had almost gotten to closing. I represented the seller. We almost got to closing, and it went to into not foreclosure, but it went into an auction because of
Mm.
a previous lien.
Mm-hmm.
Guys, I'm sorry, this probably goes over your head, but anyway, so we didn't close the sale because this other person took it out from under them, and that
Yep.
other person didn't check to see that there was a mortgage on it, and so
Mm-hmm.
they poured thousands and thousands of dollars into this house only to have it taken in foreclosure.
Mm-hmm.
And you know, I kind of watched it from afar because I was like,
Yeah.
man, we were going to close that sale, and we didn't get to. So yeah, so title company fees, very important. Another thing you should know is that definitely title companies are different from one another. They do perform the same service, but there is a level of conservativeness that we definitely run into, and just some title companies want things a certain way. So also in Texas, not a hard and fast rule, but you tend to see the seller to get to pick the title company.
Yes.
But
Correct.
it's negotiable, but it
Yep.
is something you commonly see. So
Yep.
yeah,
Yep.
yeah.
And
So
so something that is negotiable right now wasn't negotiable prior to maybe the last 2 years. Wendy, you can obviously speak to this
uh,
better than I can. Is if the
mm-hmm,
owner's going to pay for their portion of the title policy, right?
yeah,
If
uh-huh,
if the buyer has to pay to get a new policy, or if the seller is going to pay to get the new policy. 95 times out of 100 prior to, let's just say, the beginning of COVID, that's an easy demarcation of when the housing market got crazy. We
yeah,
used to see the seller have to pay the title policy, right?
mm-hmm,
They would just pay for the new title policy, didn't think anything of it, and that was just the way it was.
right,
Then when things started getting uber competitive,
yeah,
maybe buyers would have to start paying for the whole new title policy and things like that. So it's one of the questions that, whenever somebody asks me what their closing costs are going to be, it's an important question because that could change what my answer
right.
is going to be, from anywhere from $1,000 to twenty five
Oh yeah,
hundred dollars based on
yeah, yeah.
what the plan is there.
Mm-hmm, mm-hmm. Speaking of COVID, when COVID hit, all of a sudden there was this change in closings, where we literally were doing closings in the parking lot
Yep.
at title companies instead of like going in. So it's just, yeah. And the notary would stand outside the car door and you would kind of hold things up and, with the glass.
Yep.
And that was how you did a closing.
Yep.
So,
Different
yeah.
world.
It really did change things very quickly. So, and another thing I've got listed here, sometimes you're going to pay for a notary, sometimes a courier,
Yep.
kind of goes, that seems to me to be not as predictable. You may have that, you may not,
Yeah.
seems like. Um,
Super
Also
situation
recording
specific.
fees. Oh, sorry, what'd you
Uh,
say, Austin?
yeah, I was going to say super situation specific. Do you
It
need to
really
have
is.
somebody come to you to sign because you can't get off of your military base or whatever it may be?
Right, right. And that really jumped up in the COVID period
Mm-hmm.
where you did mobile closings almost everywhere. Nowadays, we're kind of getting back to
Yeah.
closing in the title company. But
Yeah.
yeah, there's still, and even if you request it, I would say that most of the time we buy anything personally ourselves, we always have a notary come to our house. It's
Oh
just
yeah.
easier. We just have a mobile notary come, we sit at the kitchen table, it's done.
Yeah.
So yeah, so I have notary, courier, recording fees, attorney fees. So
Mm-hmm.
that's twice now that we've seen attorney fees to the buyer.
Yep.
And meanwhile, the buyer doesn't even know who this attorney is.
Yeah.
So,
It's basically, the lender has their attorney to make sure that all the documents are in order. Same with the title company. They're going to have their attorneys to make sure that everything is in order, so that, somebody's not coming around to say like, oh, well, I actually have a lien to this property, and
right. Mm-hmm.
now I'm gonna sue you guys and stuff like that. So,
Mm-hmm, mm-hmm.
it, it's important, right? It's a big deal
Yeah. Oh,
for
absolutely.
in the
Mm-hmm,
end, you're
mm-hmm.
being lent hundreds of thousands of dollars, and the bank and the title company have to ensure that they're not legally liable for anything down the road that comes from lending out that money to help somebody purchase a home.
Yeah, oh, absolutely. So I also have on here, title insurance, we talked about that, settlement fee, tax certification. Those are the other things I see. The
Hmm.
settlement fee, is that basically what the profit that the title company is making? Is that what that
I don't
is?
know if it's the profit per se. It's similar to their, just like processing and underwriting isn't our profit.
Mhm.
Let's say our fee is 1545. Our profit isn't 1545 from that loan per se, right?
Mhm.
I think that's just kind of their fee, similar to our lender fee. It's the
Right.
title fee to do it. And
Makes
again,
sense.
those are the same, pretty much
Mhm.
within maybe $25 from company to company because Texas is so regulated with those title fees.
Right, right. Absolutely. So the tax certification, that's an
Hmm.
important one. That's a
Very.
really important one.
Yeah,
Uh,
because we can pull stuff online that's public record, but maybe there's an additional tax bill that's not on the normal tax bill or something like that.
mhm.
Houston's
Mhm.
notorious for having that. They have like three different tax bills. I don't know why, but
Oh,
they do.
wow.
They'll have one
Wow.
for like the school district, another for like the water, and this other one for this. And so I just helped a buddy of mine refinance, and I was like, "Hey, it looks like your taxes are this," and he was like, "No, they're actually this."
Oh my
And so the
goodness.
tax certification from title is actually what every single lender will go off of.
Mhm.
So it's
Mhm.
super important because that's what helps get your escrow set up correctly.
Right. And also in a future episode, we'll talk about actual cost cash to close. And property taxes are going to actually show up there because the seller pays for all the property taxes,
Yes.
you know, year to date. So up to the day
Yep.
you close, the seller is going to pay for that.
Yep.
So yeah, so that'll show up on closing as well. And we'll get to that. We're going to talk about the difference between closing costs and cash to close in a future episode. So
Yep.
all right, so let me tell you a little bit about realtor fees, because I can tell you, I see, on social media all the time, I see these realtors that, they're advertising their services, and they're saying, this won't cost you a thing. I'm a buyer's realtor and you don't have to pay a realtor. Not actually true. Because then I see the other side where the buyers do have to pay the realtor and they didn't expect it. They didn't read the fine print. And all of a sudden they're having to pay the realtor. And then they're just like, man, I'm already buying a house here. Why do I have to pay a realtor too? I've already got so much I'm paying for.
Yeah.
So I want to walk you through that. I want to explain to you how that works. Basically in Texas, okay, you have a buyer representation agreement, right? And that's the agreement between, makes sense, the buyer and the buyer's broker, the buyer's realtor, okay? So that's what this looks like, okay? So on that agreement, I'm going to read it to you. It actually says the parties agree that the broker will receive a commission calculated as follows, and it has a percentage of the gross sales price, right? So right there, right then and there, you've just agreed that the buyer's broker or the realtor is going to get paid a certain amount. Okay, you just agreed it, you signed the agreement, boom, you just agreed that somehow or another that buyer's realtor is going to get paid, and whatever percentage they may put in there, completely negotiable. Okay, now on the other side, you have over here the seller, and they're meeting up with their realtor, and the seller saying, hey, I will pay a buyer's realtor this much, right? And that's addressed in this agreement too. It says, it says source of commission payment. The broker is going to try to obtain the payment from the seller or the landlord or their agents. Then it says right there, if those people won't pay, then the client, which is the buyer, they're going to pay. Okay. So ultimately, who is on the hook here for the buyer's broker? It's not the seller. It's not the seller's realtor. It's you, the buyer, who are agreeing that the buyer's broker is going to get paid. And we hope that the seller is going to
Right.
happen to match, whatever the buyer says they charge. But if not, yeah, you're on the hook there. You don't have a choice. So
Hmm.
read that agreement carefully. On our buyer representation agreements, we actually mark through that, and we have a verbiage that says we will accept whatever the listing agent offers,
Sure.
right? So that you don't have that wild card. That's what we do to take care of our clients. But yeah, common misconception there that you'll never have to pay a realtor as a buyer. It's not true. Not true in Texas.
Right.
Anyway, it's not true in Texas. So So yeah, well, I think we've covered it. What do you think? Is there anything we haven't covered? Anything we've missed?
I don't think so.
Yeah.
I don't think there is. You know, it's like I said, it's one of those things where if you've got somebody who knows what they're doing, when it comes to on the lender side, there's a lot of numbers on a closing disclosure, on a loan estimate, on things like
Mm-hmm.
that. You
Yeah.
don't. There's a lot of things that you also don't have to worry about, right? On those kind of documents. So a lot of times I'll tell people, hey, you see all these numbers on here, you really need to only worry about A, B, and C, right? Obviously, you need to pay
Mm-hmm.
all of them.
Yeah.
I'm not saying, hey,
Yeah.
you don't need to pay them,
Right.
but you
Right.
need to
Right.
pay all of
Mm-hmm.
them. But
Yeah.
the ones that you want to focus on are A, B, and C. The rest
Mm-hmm.
are the same, whether you go with whoever, right? So
Mm-hmm. Mm-hmm.
don't spend your time dissecting these fees that are going to be there regardless. So
Yeah. Yeah.
it's a
You
lot
know,
that goes
it's
into it, but if you have somebody that knows what they're talking about, then you can
yes,
actually learn quite a bit.
absolutely. Mm-hmm. You know, a clarification that just occurred to me is as realtors, we always have our go-to lenders, right? And a buyer might think, well, now wait a minute, are you getting a kickback on that?
Mm,
And the answer is no, we just know the loan will close.
yep.
See, we're like, go with our lender, not because we're making anything on it, because we're not.
Yeah.
But it's just because we're in the industry all the time working with buyers and sellers, we're like, we trust these particular lenders. So our motivation is purely that the loan closes.
Yeah.
So,
That's it. I mean, that's it. It's the same with us. If it's the other way around, if
yeah,
hey,
yeah.
I have a referral for I have somebody who's pre-approved and looking to buy in
Mm-hmm,
Dallas or
mm-hmm.
Austin or across the country,
Right, right.
I'm going
Mm-hmm,
to ask for different. Where are you looking and what kind of budget to find somebody who's going to
mm-hmm.
help you find the right house and get under contract, right? It's
Sure, yeah.
they're I mean, kickbacks are illegal. It's another one of the things that was
Mm-hmm.
um,
Absolutely. Yeah,
basically
yeah.
banned at this point.
Mm-hmm.
So
Yeah, and I know you've sent us referrals, and that's been great because, both sides, we worked together and we knew what we were doing as realtors. You knew what you were doing as a loan officer, and just very seamless
yeah,
transaction, just so stress-free. Because moving is hard anyway. You need to know that you're working with someone that knows what they're doing to help keep it through. We had one, we closed two just yesterday that we were like, okay, there were some hurdles in the road there, but it was a lot less stressful than it would have been, so we got through it. So,
yeah.
all right. Well, I think we've covered it. Guys, if you see any questions, hit us up in the comments section and we will definitely respond to you. And otherwise, oh, and don't forget to check the description section. I've provided a link to a PDF where you can read everything we've talked about today in terms of closing costs. It's a great little graphic for you. So if you're like, didn't happen to be taking notes,
Which
you
is
can get it
okay.
all
Which
there,
is totally okay.
which is okay. Yeah, exactly. All right. Well, Austin, you know what? It's almost Christmas when we're recording this. So you guys, your family have a great Christmas. And everybody out there watching, also have a great Christmas.
Thank you. Happy holidays, everybody. Thank you so much for having me.
Yeah. Thank you, Austin. And we'll talk again soon.
Looking forward to it. Take care.
Bye.